Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the Nasdaq market site in Times Square, New York City, we have Dr. Merav Ozair, global leading emerging technologies expert, as well as Scott Zoldi, Chief Analytics Officer at FICO. We have Piyush Sevalia, Executive Vice President of Marketing at Nasdaq-listed SiTime, as well as Adam Maarec, joining us from Washington, D.C. He's a member of McGlinchey Stafford. We're here to discuss AI and data governance, how to implement that responsibly, ethically, and why operations and trust are key to executing on this the right way. It is great to have everyone with us. And Scott, at the end of the day, we have all of these amazing technologies. They're rolling out, they're evolving quicker than I think any of us expected. But at the end of the day, it comes down to accountability and transparency and ethics and everything that goes into it. That's the central theme of all this.
It absolutely is, right? And having a standard under which you want to develop an AI and be able to demonstrate that you've kind of governed, that you follow that standard. Otherwise, you have lots of different ways that things get created and all very, very different paths.
Yeah, and Merav, you and I have spoken about this countless times. You're joining us monthly as we do on the show. Part of that is the evolving framework and policy around it. And by the way, it's not just in the US, it's global as well.
Exactly. And we are trying to understand what are the policies. So far, we're not getting much. I mean, other than the EU, which has the act, the only country, I think, the only region that has, an act that specifically about that. The UK is not really, walking away from from it somewhere. And the U.S., the Biden administration, the self-secure and trustworthy AI is revoked. Yeah. So now we just thinking of. So we don't know, right. What does it mean and what is a new, executive order means. I mean, because from what it, at least from the language, it says, that the previous executive order was basically stifling innovation. It's burdensome for companies, and we need to remain the leader in innovation. So my question is being a leader is all what counts, and what's the cost? Should we sacrifice safety, security, ethic? I mean, it's like, it's like giving a car to, I don't know, a 17-year-old, and he knows that, she knows that there is like,
and that's really part of the challenge here, because you have multiple competing priorities, right? Whether you're thinking about, introducing new products internally, externally, revenues, it's a competitive landscape. Then you have the cyber and data governance side of the house, and until you get that clear framework, it can be a challenge. So from a practitioner perspective, Piyush, and you're working with a number of different electronic devices and AI models and so forth. How are you working with clients to get them to that point where there is trust and accountability?
Well, at the hardware level, everything's got to work, because without that working, you're not going to be able to implement the policies, the software, the systems. And so what we as a provider of timing, and timing is literally the heartbeat of all electronics, we make sure that they're getting good timing so that the hardware works reliably, whether it's in a number of devices in the data center or outside the data center. It all needs to be synchronized, and that's what we do. And we just enable the systems to make sure that the higher level training, inference, policies can all go
Which
in
is
place.
so interesting, because it's almost like the pendulum's coming back to hardware when it was so software focused. Adam, I want to bring you to the conversation here. When we think about AI model development and training, it all depends on the quality of the data, whether you're thinking about the consumer-facing end of open banking, other finance uses, or any industry. It all comes down to the quality and the governance of the data.
That's right. And the regulatory environment here in the United States is shifting, where we have this new open banking regime. The Consumer Financial Protection Bureau, the CFPB, finalized rules last year that empower consumers to grant third parties access to their data. And that's access to raw transactions data from a consumer's deposit account or credit card account. And that really granular level of data can now be ingested into models and used to train them and to develop some really sophisticated insights to deliver services back to consumers. And the CFPB created rules with a real framework for the safe and transparent disclosure and access of data.
Yeah, well, Adam, I'm going to ask you this as well. I mean, when you think about open banking data systems and so forth, doesn't that open it up to other third parties, and then you have, other vulnerabilities that exist there? Because of that, how are companies thinking about this? Whether it's access to data, and then of course you have all the privacy aspects as well.
Right.
Yeah, that's right. Lots of privacy risks to think about as data is moving from the banking system traditionally, from banks that are offering deposit products and credit cards, out to non-banks and technology companies in digital wallets. Those companies are subject to different regulatory regimes, and as data is copied and changes hands, there are more potential points of failure. And with each new database, a new redundant copy of data, that's another opportunity for data to potentially be accessed by hackers. And
exactly.
what the CFPB's rules try to do is put a framework also, on recipients and how they can use that data in really a new way that doesn't exist under federal consumer.
Yeah, I mean, Scott, at FICO, of all places, I mean, you certainly know about the most robust principles as it relates to data.
Yeah, absolutely we do it, right? And I think one of the things that I think is really important is that regardless of what's happening from a regulatory perspective, businesses want to succeed at the use of AI and data. And so, one of the things that we do is we define a standard, we leverage an AI blockchain to have an immutable record of every single decision that's been made. And what, you can say whether or not regulation will catch up and enforce that, right, in different sort of regimes, but it's good business, right? So the quality of the models, the quality of the security, the quality of the data that's being used, it's all sort of audited, and right? And I think I often want to see the conversation pivot away from regulation and administrations to what would a company do to have a world-class sort of solution that's built safely, securely, accountable, and in a way that is something that will be reliable in its use. And I think that's where we have to kind of look at responsible AI across security and data and AI usage, and simply say, okay, let's define the standard and then use a blockchain to enforce it's done that way, and then you'll get all the sort of derivatives in terms of the value of that product and also the quality of that product.
See, and Merav, Scott makes a great point, because when you think about the responsible use of it, no one's stopping you from practicing good governance.
Exactly. Right? I mean, okay, I mean, people are saying, oh, we should wait for, the legislators, the regulators to do something. No, you don't have to wait. I mean, if you build something, build it. This is what responsible innovation is all about. It's not you have to follow the regulation. It's not what it means. It means that when you build something, you are responsible to build it wisely, making sure that it's not going to create more problems than it solves, right? And just in a nutshell, but that means it has to be ethical, it has to be secure, it has to follow the trustworthy accountability, etc. And at the end of the day, that's what I'm always trying to explain to people. They think that innovation and responsibility, they are counter to each other. They are not. At the end of the day, it's in the benefit of anyone who develops something that it will be trustworthy and responsible. Because if something goes wrong, then and that's it. You lost the trust of everyone.
Right. Well, I mean, Piyush, just think about it this way. Even if there is a framework in place, right, you're still going to have cyber attacks. You still have to operate reliably. You don't need anyone to regulate the intangible worth of your reputation.
Yes, yeah, I'm listening to this conversation, and the responsibility as well, the innovation part. At the hardware level, it's implicit. You got to be responsible to make sure the hardware is working right, and you got to innovate like crazy. And I think we are just at the beginning of a big cycle of innovation. Yes, it's, as you said earlier, started out in the hardware side, but it's going to permeate all the way up. And so you're right. At some point, the frameworks, the standards, and everything is going to come in. It will have to come in.
Exactly.
The question is when, and how do you innovate quickly, while at the same time make sure you're responsible? And that's the debate that's going to go on.
I don't think it's even debatable. It has to be right from the outset. When you just, and StarTalks does that every day. I mean, when you build something, you're already thinking how to build it responsibly. I mean, when you just build the architecture of whatever you do,
it's a frame of mind.
That's a frame of mind.
And it's the same thing in hardware too.
Exactly. So it's not like, okay, we think about it later. There's no later. It's
Well, Adam, I'm going to ask you about this because you bring that up in your notes as well. Model risk management. It's existed for years in banking. It's not going to, just suddenly change overnight just because there's new regulations in place. I mean, it's been used to manage AI, critical infrastructure, and data for a while.
That's right. Model risk management is really the principal method that prudential banking regulators have used to ensure that the use of models and more advanced technology, including AI, is deployed in a responsible way by banks that are managing consumers, money, people's money, and the most important valuable assets that people have. And so, while we think about responsible innovation, it's great to say that the industry and folks are uniformly thinking about the best way to do things and treat people fairly while delivering innovative solutions. That's not always the case, and the purpose of these new regulations is really to set the floor, but at the same time to promote innovation. And what the CFPB did in these new final rules to spur innovation is delegate some standard setting authority to what they're calling a recognized standard setter. And they identified the Financial Data Exchange as a standard setter for companies in the United States to share data following a single standard, and with the objective being that you have interoperability, and that all banks and what they call data providers are spitting out data in the same format so that it can be ingested by folks across the industry and easily understood.
Right, and Adam, you make a point in your notes as well that AI is just a tool, right? We had someone on from the EEOC talking about this from human resources perspective, where whether it's an AI agent or a person, if there is an infraction, you're still responsible for that infraction.
Absolutely. Yep. So I think that's the primary example. If you think about an AI customer service agent, right? Well, humans are prone to errors, and if a human agent makes a mistake and tells somebody the wrong thing, well, a company is going to need to be accountable for that. Same for a programmatic IVR. Well, if you've got an AI-based customer service agent, and that AI-based agent makes mistakes, well, the company is going to be responsible for that.
But there always was a case like that. I think a year ago with Air Canada, if you remember, that it wasn't here in the U.S., but the judge basically said, you are accountable. You can't say blame the machine. It was an AI assistant, and made the mistake. No, it's you. So they basically had to pay, follow whatever that mistake happened. I mean, that was, the judge. It was Canadian judge, but I don't know how it's going to work in the U.S. But I think
it'll work exactly the same way, Scott. I mean, at the end of the day, when you think about digital transactions, as Adam was alluding to, you're going to have no choice but to leverage digital technology. It's going to have to be part of your core strategy.
It's going to be part of the core strategy, and then where it's very difficult to prevent hallucination, right? There are going to be new innovations. So like one of the things that I'm focused on is this concept of an AI trust score, right? And so you can basically monetize or understand what is the level of risk you're willing to take, right? And that at least you have a knob to have. Because expecting AI to always be correct is never going to happen. All models are wrong and some are useful, right? And so we need secondary models, and this concept of an AI trust score, right, allows you to operationalize. And that's something that we have to focus on now, is getting out of this sort of the optic of being amazed with this technology and get down to brass tacks of building with that technology. And that means having these sort of risk-based strategies for use of the technology in a responsible way. And part of that responsible way is, yes, come up with the very right algorithms to implement, but also have this sort of risk threshold that you're willing to take and measure that.
See, and I'm glad you brought that up, because at the end of the day, there has to be redundancies in place, right?
Yes.
There has to be some sort of backup system there, and you also learn from these mistakes. And I think it's important to recognize that as well. I mean, Piyush, that's one of it's paramount in the tech industry.
Absolutely, and I mean, all the systems that you have here, the financial trading systems that exist, they have built-in redundancies.
Right.
If your GPS signal goes away, they revert back to a local timing source to make sure that the systems are going to continue to operate like they're supposed to. So it's going to be built in. It starts at the hardware level, but even at the software level, the same thing's going to happen. Yeah. There's another aspect to this which also comes into play, which is you have to make it user-friendly.
Yes.
Right? You have to make sure that people understand exactly how all of this is going to work so that they can make an informed decision. So there's that whole user friendliness aspect of it that comes in that has to be, people have to be educated on and information has to be available on.
See, Merav, this comes back to the digital conversation in general, because you and I, when we cover digital assets together, I see a lot of parallels here.
Right.
Where it's no longer the ethos of the tech side versus the what's already implemented.
Right.
At the end of the day, it's starting to mature once you're having that user experience conversation where it gets from point A to point B, and we're not thinking about why.
Exactly. So, I mean, as a user, I mean, they don't care about everything that we're talking here. Basically, they want to have a product that you can trust, that it can operate. There's no, it's seamless, it's easy to use, and I can trust it. That no one is going to hack, and no one is going to use it for all kinds of reasons, and I'm not being, misused in a sense of, discrimination or anything like that. So at the end of the day, it doesn't matter to the user.
Right.
They want to have the product as we want to, if you are a company, that it is trustworthy, that it does everything, whenever you want it. It's easy to use, you don't have to go through too many. I mean, you
want the interface to be accessible and easy. But Scott, I want to make another point here. In addition to it being user-friendly, it's also the responsibility of companies to be able to detect, mitigate, and respond in an effective way, because incidents will happen.
Yeah, and this is an important point. Like when we develop models, right, we develop them onto a standard, and as I mentioned, you can put that on the blockchain so you demonstrate that you followed every part of the standard. But as part of that, when you build those AIs, you already set the standards for how you monitor, right? And so, we have a whole issue from an AI monitoring perspective where people don't know what to monitor or how to monitor. But in fact, we do. When you build the model, you know what the thresholds are for all the different sort of components in that AI. And it's a critical part. So I oftentimes talk about these AI blockchains as both the development history, but also the user manual for how you use that moving forward, right? And that has to be codified, right? It shouldn't be something that someone's guessing later on. It's basically who developed the model or the AI knows exactly when you pull that back. And in the industry, we have a term for that. It's called humble AI. And at that point, you're going to step away from the model, and it's not a business discussion. It's a technical one because you've set that up front.
And from a user point of view, I mean, I'm a marketing guy, right? I mean, we always look at what people want and then marry the technology to that. And the question is, do we do that first? Do we do that later? And it's always at the beginning, typically. You have to do it. Otherwise, you're not going to build the right product.
Right, but at the other end of it too, though, and I know that sometimes we fall in this trap of working in silos and so forth, but if you want to get an overall picture of what that risk looks like relative to the return, especially, electronic devices that you're using that are AI-driven, and they're being leveraged in things like cars, right? Are we sometimes moving too fast just to stay competitive and not thinking about the risk first?
Yes and no. It's a mixed answer.
Right.
On one hand, you have to move fast to stay ahead because innovation is the name of the game. On the other hand, yes, there are certain regulations that need to be introduced. So it's going to be a balance between when the standards, the regulations are introduced versus how fast are you innovating. And it's been there at the time of the internet, it's been there at the time of cell phones, it's been there at the time of automotive devices.
But still, I mean, when people tell me we have to innovation, we want to move fast. I mean, move fast and break things, and make things, something like that. They say, I mean, why break? Why? I mean, you don't have to break. I mean, you can still be responsible from the outset and think about the risk, and build the architecture. Also, it's gonna. So you think about another 2 minutes. 2 minutes is not gonna change too much. So it's possible to do it. It's just a matter of a mindset. The problem is that the mindset is move fast and break things, and not move fast and be responsible.
Right. And Scott, we have to wrap up here, but from the last 30 seconds, that's why I'm glad you brought up the humble AI, where you're willing to take that step back and share that with the industry. I mean, think about automotive safety as an example, where you're able to share those data points that you're bringing up, that piece of the humble puzzle also lends to responsible use.
It absolutely does. It just anticipates what that backup plan looks like and what are those sort of strategies for when you move back down, right? And And at the end of the day, right, I mean, that enables sort of our products or solutions and the safety of those AI to be leveraged in an appropriate way, and it establishes trust. I mean, in general, there's a trust issue with AI. We're in this golden age of AI, frankly, right, with all the capabilities, but we need to go focus down on how to do that responsibly, and part of that is being very prescriptive.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.